Hi.
Hello everybody, it's Jay Walsh from ABC Capital Investments, and I want to talk a little bit about the financing that we secured for domestic U.S. borrowers. Basically how we can get you in deals with no money out of pocket or very little. So let me get into that right away. I'm going to call this the Deal Clinic. That's for a couple of my friends in London. But we're going to use an example of a duplex, 2642 Lehigh Street. The cost will be $92,500. Your annual return, this is net, after all your expenses are $11,892. That gives you a return on investment of 12.8%. That in itself is a pretty good deal. But now with the financing we have, which gets you into the house, most of the houses need to be rehabbed first before you can rent them out. But to give you an example, this house originally was bought for $60,000 and needed $30,000 in work. So let's say your total investment is $92,500. We have private lenders that will lend you 75% of this total investment. So you would need $23,125 to get into the deal. The balance, $69,375, will be financed at 12% interest. I know, it sounds like it's high, but it's not the cost of the money. It's the access to the capital to make you the money. And this is short-term financing. That payment would be $694 a month. So your cash flow here, this original one at $11,892 gives you $991 a month. You minus the $694, your cash flow is $297. This $991 is after taxes, insurance, everything. So this is free cash flow to you, $297. So that, if you kept your money in what we call hard money private financing, you would take this cash deal at 12.8% to a finance deal where you only put $23,000 in the deal and you got 15.4%. But that's not what we're trying to do here. That's just to get you into the deal. We have, and you have to get pre-approved for this, so email or call us or send something to us on Facebook. You can get invest@abccapitalinvestments.com to get a hold of us. What we're trying to do is get you pre-approved for a loan. If we can get you pre-approved for a conventional loan from a conventional bank, Philadelphia bank, 4 to 5% interest will be your long-term interest rate. But you need 6 months in the deal to get 75% of that after repair value. So I'll give you an example. This thing will appraise for $130,000. Some might say, well, how do you know that? I know that. Let's just use that as a fact. So now that it will appraise for $130,000 and you get 75% of that from the conventional lender, you got $97,500 in financing you can get from the bank after 6 months. You take this new loan of $97,500, you pay back your original high interest loan, this new one's at 4 or 5%. You get your 25% back and you actually walk away with $5,000. So your new cash flow would be $991 minus $523, and this is a 30-year principal and interest mortgage. So you're paying the tenant's paying your mortgage off. Your cash flow of $468 a month. Now, that's at 5%, which we can get you with this bank. What is the rate of return here? Anybody that's been doing real estate will tell you that you have an infinite rate of return because you have no money into the deal.